Hey traders, this is Blake Morrow with Trader Summit. I have Mr. Dick Matthews from Pardus FX with us today to break down this massive response that we've had to CPI data here in the US today. Break it down for us, Dick. What happened?
Market didn't like the data. Then the market liked the data. So the market went down, went up, ended up in the middle, and just sort of shrugged it off. I mean, as we said last week, the data probably was a little bit worse than people were expecting. Not much, but a little bit worse. And I think, to me, the one thing to take out of it is that it's going to be slower than people think on the way down. I think inflation is going to gradually come down. It's just not going to drop really, really quickly, which goes back into what the Fed's saying, higher for longer.
Well, so that's what it tells us. Conventional thinking would be that, well, if Fed's going to keep rates higher for longer, for prolonged, you would see more of a negative response in equities. You'd see a more positive response in the dollar. Yet it's been more choppy. I want to say that anybody who bought volatility ahead of the CPI data are the ones that are getting crushed today, right?
Yeah, bizarre, absolutely bizarre, because the whole market's been waiting since non-farm for this one figure to come out, and it's going to happen, it's going to happen. Wise traders went into it flat, I've got to say, and a bit of a damp squid really in the end of it. So what have we got now? We got 2 weeks, 3 weeks before the next non-farm payroll figures.
Yeah, I mean it's going to be about what, 3 weeks, I guess. But the other issue is, there's data that's coming out in between now and then. But let me ask you this. All right, so with what you saw today, what should we be doing with the dollar, and what should we be doing with stocks? Because stocks aren't going down. They haven't gone down with the stronger jobs report. They haven't gone down with the higher than expected inflationary print. Do you just close your eyes and buy the stock market? Is that the trade? Is that what you say do?
I think that's right. You just shut your eyes, hold your nose, and buy the stock market. And it's been pretty much like me saying buy the euro, buy the stock market. It's not something which I'm happy saying, but I think the way the market's reacting, you just got to do that, which is bizarre to me because inflation is pretty sticky over there, and the Fed's going to tighten until you hit a recession. End of story.
So let me ask you, with the UK, a little bit different story. I mean, the sterling's holding up, but we've got UK inflation tomorrow morning, early tomorrow morning for you. How should we be looking into that, and how's the sterling going to respond?
Right. I'm still not a fan of sterling. Hands up, I'll admit it. I don't like sterling. Employment figures came out today. The wage elements of those were quite punchy, and employment's holding pretty well. People are now talking that the Bank of England will do another 25 basis points. I think they probably will. I think inflation probably will be a bit like the States, will disappoint again, which will put pressure on the Bank of England to raise rates. But overall, you've got high inflation over here, and it's not dropping, And it's interesting that talking to people, I go swimming, I have all sorts of friends who are not in the markets, and they think when inflation drops, prices go down. Which I find baffling. If inflation drops, prices don't go down. They just level out. And I think there's this mentality of people: oh, inflation drops, everything's going to be fine. No, it's not. We've got really high prices over here. Interestingly, it's been a really dry and cold winter in southern Spain and Italy, where most of Europe relies on for our fruit and vegetables. And I think that could have a little bit of an inflationary impact as well. So that will start feeding through. I think the inflation number will slightly disappoint tomorrow. Sterling broadly range trading between, very wide range, 118.5 and 124. We're pretty much now in the middle there now, aren't we? I would play it from the short side. You never know with the Bank of England what they're going to do. I still think you've got political uncertainty coming in this country, which I don't know whether your followers see. More and more talk of Boris Johnson making a comeback after the May elections.
That would be something. What do you make of that situation?
Got more comebacks than Frank Sinatra, isn't he? I prefer to listen to Frank Sinatra singing, I've got to say. I wouldn't bet against it, actually. I think that Sunak's not performing. Conservative Party's going to come in for a real hammering. And if anyone can save their seats and save the MPs' jobs, it will be Boris Johnson, because he appeals to the public. People will shoot me for saying that. I'm not endorsing him by any means. But I think you could start seeing a bit of political uncertainty, which the markets won't like. So we're now got that level right up there. Doesn't want to break through 124.40, isn't it, or something?
Yeah, about 124.50 roughly. Yeah.
Yeah. And then down 118.5 somewhere.
Yeah, about 118.5 would be the lower end of this of the lows that we saw just, the last couple of months.
Yeah, so I would be trading it on the downside, because it's actually getting stuck around about the 122 and a bit level. 124 is a definite sell, and I think people will run that in front of it. So I'd be looking to sell it still down on 118.
Still looking to sell sterling and play to the short side. So if the inflation data, let's say it's doesn't come in, comes in maybe a little hotter than you're expecting, you get a little pop in the sterling, you want to use that to sell into, I guess. Yeah,
I think so. And I think that, bearing in mind that the inflation number is still 5 times the Bank of England's target level, we're still up in double digits. And they've got a lot more tightening to do. And I'm really old-fashioned. And it goes back to the 70s and 80s when you had to have base rates or interest rates above the level of inflation.
Well, why wouldn't I want to be long sterling then? I mean, if you think the Bank of England has so much more work to do,
because I don't
why not buy sterling?
I don't think they'll do it. Right. So there's an old saying, but there's old brokers, which I am, and there's bold brokers, which I'm not. But there's no such thing as old and bold brokers, right? And if you think of the Bank of England's old, but it sure ain't bold. And I think that they'll just be a little bit timid, and the inflation will carry on edging up. And, I think overall that's a problem, as opposed to the ECB, which is, what the ECB is going to do. They're being absolutely dead clear. We're going to tighten till the pip squeak, and the Fed's going to do it. Whether people want to believe what the Fed's saying is another matter. I still think the Fed's going to tighten. I actually think that you'll see Fed funds up at 6%, and you won't see any cuts this year.
Well, that's going to be interesting to see, because and I think we're going to have to reassess after the inflation data tomorrow. Dick, you handhold us every single week. Is that what you do for Pardus FX?
Well, I don't handhold Pardus FX, but I handhold
clients. I meant
and our internal funds, and I just try and guide them through the black arts, as one friend said to me, of the foreign exchange markets, and try and give them some nice, cool, calm, collected advice.
All right. Well, we appreciate your advice here. So for all of you that do, make sure you give Dick a big thumbs up and subscribe to the channel so you don't miss any of this exclusive content. Richard, I look forward to meeting with you next week. I hope you have a great week, and good luck.
And you. See you, Blake. Cheers. Bye-bye now.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.